Hi guys, hope you had a good week. Just thought we'd do the stat stream again, and this week I'm going to go over a question I had on YouTube on my first stream. The first stream, if you can recall or you saw, the stream was on IB ranges and how wide or narrow the IB range is, and whether we'll then go and break both sides during the day. Now, I got a couple of questions on the video, so I thought it'd be best just to do another video to answer them. Alright. So, a guy asked, how is the data back adjusted for rollover? And then he was interested in to see whether there, was I taking into account a 16 tick range for a market that's trading, let's say, 3,500 versus a 16 tick range on a market that's trading 2,500. So the first is equivalent to about 0.6% and the latter being 0.4%. So they're slightly different. So I'll go ahead and answer the first question, and this is pulled directly from Market Delta support. So we feed Market Delta, the charting platform that I use for the studies. We feed that via DTN IQ feed. Now, DTN IQ feed have two different types of continuous contracts. They have at ES pound C and at ES pound. Obviously, the C is the smoothed continuous contract. So they, like it says here, they smooth out some gaps and they adjust it so the prices aren't always perfect, but the idea is to get a clean chart. So by default, Market Delta always gives you the continuous smoothed contract. So all of the studies I've been doing that have been using the continuous charts are on the ES pound C. So if you wanted to replicate them or anything like that, you need to be using that symbol, but it defaults to that anyway, even if you just use at ES pound. You have to go through and manually change it if you want it different. So anyway, getting past the continuous contracts, the other question was, the answer to that is I didn't. I wanted to keep everything really simple. I just wanted to say, okay, if we have a 16 tick range or whatever the range I chose in ticks, I just wanted to know how often it got broken. And then I went back a standard amount of time that I normally do to see, how relevant it is. But obviously it doesn't take into account the fact that the index or the asset changes in value, so you might start to see larger ranges or smaller ranges depending on the value of itself. So all I did was I created the same studies again, and we'll go through them in a minute. I can do this with quite a few of my studies, and I'll slowly start putting these other studies together so we can see how they differ. But essentially, all I did was turned the ranges into a percent of yesterday's close. So I take the close from the previous day, and then whatever I'm looking at, I reference it in terms of yesterday's close. So the three studies I've got to talk about today are a daily range, just to show you how I've done that, and then I've done the narrow IB, break both sides, and the wide IB, break both sides. And I'm going to talk through those for the Euro Stocks and the Bund, and show you the examples. So I'll show you on Market Delta. So we'll start with the daily range. So this is for the Euro Stocks. So let me show you the formula in here. So I'm essentially just looking at the high-low range, so high minus low here, over the close dot one, which is the close from yesterday, and then multiply it by 100, just so I've got the references in percent. And then we're going back here, probably, let me check, see how many days. We're going back 1,800 days, so we've got quite a large sample here. Our largest day was looks about 15%, which seems quite high, but no, that looks right. That's back from 2010. So we've got the profile as always on here. And let's pull it up, and it's showing here our mode here is 2%, our value area low, so the lower one standard deviation is 1 and the upper is 3. Now I'm not sure why on this computer I can't do the second value area, but we'll just change it here, so we'll put 95. So 5%, a 5% day is very rare here. So that's saying, so 2 standard deviation is 5%. And obviously that's adjusting for the contracts, the contract's value. So again, I'll just change this to the Bund, and then I'll have a look at the Bund before we go on to the IB ranges. So pretty similar for the Bund. Let's just check how much data we've got. 1800 days again, and our mode, it looks to be 0.4. Yeah. So the most common daily range is about 0.4%, with 1 1/4. We'll change this back to 1 standard deviation. So 1 standard deviation range is about 0.8. So you'd expect the Bund to be between 0.3 and 0.8% on a standard day, on a normal day. And then we'll go and look for what the second standard deviation is, 95% of the time. And that's 1 1/4, with our largest day being nearly 2 3/4%. So that kind of gives you a feel for the ranges, and obviously it's been normalized, so you're looking at the percent ranges instead of just the number of ticks. So we'll go on to the narrow. It's the narrow IB stat. Just this. So it's pretty similar to the stat that you saw before, although I've changed a few things. I've created a normalized IB range here, so very similar to what we were doing before with the high-low range. I've just done mixed periodicity data high, mixed periodicity data low, or high minus the low, and that's the first hour, the first hour's high and low. Then it just charts. Then I divide that by the close, multiply by 100, so I have the range in percent, and then I've just charted it as a histogram with the profile again on the right hand side, and the profile is showing that the mode is 0.3. This is for the Euro stocks, and the upper end, the +1 standard deviation is 0.6. I know it says 1 here, but this is rounding for some reason. So 0.6, 0.7, and to the downside about 0.2. So then I was deciding, okay, let's plumb some figures in, and first of all I went and had a look to see what 16 ticks was, and it came to about 0.5%. So I thought, oh, because 16 was the value I was using before, so I thought, oh, I'll just use 0.5% here. So 0.5%, our IB is less than 0.5%, 56-57% of the time of the 1700 days we've tested. Then 73-74% of the time we break both sides, so we're getting similar numbers to before. Obviously, if I was to toggle this to maybe say we go 0.3, yeah, so 0.3, you're getting a slightly higher value, but you could be here all day. You have to just kind of pick one and just stick with that, whatever you decide a narrow IB is. That's basically, that's the mode. So we could say, okay, the most common IB is say 0.3. Well, then if we're less than 0.3, less than or equal to 0.3, nearly 78% of the time we're breaking both sides. So it's really giving you an idea that a narrow IB doesn't suggest, well, to me this suggests that a narrow IB is going to get broken both sides. You know, you can't expect it not to get broken both sides when it does 80% of the time. So obviously I'll have a look at the Bund now for the same thing. Here on the Bund, we're looking at the IB range. Again, exactly the same thing, same number of days. The IB range, the histogram study here is exactly the same. And our most common IB range is 0.12%, so about 1/10%, with the upper being 0.2 and the lower being 0.6 should I say. So what if we go with 0.15 for now? So most of it's telling us that 50% of the time we're less than 0.15, and 70% of the time, or 68.5, we're breaking both sides. So maybe we want to try and pull that up a little bit more. So we say, okay, smaller than 0.1. I think that gives us a bit better edge to lean on. So if you're if it's less than 0.1%, the range, then you've got a good chance that we'll break both sides there. So let's see if we go to the upper end of this standard deviation. Yeah, so I think the 0.1 is better there. That gives you a better stat to lean on, because this is going to oscillate around, and the higher the stat, hopefully what you'll see is it'll be closer to the 75%, because if it's too close to 50%, you're getting into coin toss territory. If something say 60%, well, you could have a few times when it's more like 40% or 50%, and you're not going to see a sustained edge there. So then we'll go on and look at the wide IB. And the wide IB, hold on, let me just adjust this. Look at that for the Euro stocks first. So for a wide IB, I was looking for a range greater than 1%, so greater than the normal range. So I'm trying to adjust this out. Crosshairs on. So, 0.65. So let's try 0.65 to start with. No, I don't really see an edge there. 56, 57%. So we'll go larger. Go up to 0.8. Still really no edge, so we'll just try 1%. And it's still just oscillating around half. Okay, so let's try 1.25. No. Okay, so if we have a range more than 1.5%, an IB range, so we'll call this a wide IB, then we're still breaking both sides. Historically, we're breaking both sides 50%. So this is interesting, because this shows me either, one, I've made a mistake somewhere, or that the percentage ranges do matter. So when I was using a 16 tick range before, when we had a larger range in the past for the IB, we were breaking both sides, or we weren't breaking both sides, and now we are breaking both sides more often. So this suggests to me I need to do further study on this, because there's something amiss here. Because obviously if 2% of the time we're breaking, or 3% we're large range, and then we're only breaking about 50% of the time, then my previous study, let me see if I have it here. Hold on. Yes, let's change the session. Change the data. I think it was wider than 30 was what I looked at. Might even be 40. Yeah, I think I had 40, so there's something wrong here. So when we had, something's changed recently. So when I change it to percentage, so I'll show you them both together. Let me just copy this. Yes, so there's clearly something wrong. So 40 ticks at the moment is about 1.3%. So it's saying here, if we have an IB greater than 1.3%, then that happens about 4% of the time, but it's only breaking 50% of the time. But if we fix the range to 40, then we can actually gain an edge here. So it doesn't happen very often, very rare to be honest, 1% of the time, but we're not breaking it 36% of the time. So there's slightly more of an edge there, but I'll have a further look into these studies and come back to them. So we'll change it both for the Bund and have a look there. Recalculate these. Bund, I think the wide range is 0.4. So 0.4 of the time, a 40 tick range is a wide range in the Bund, and then so that's happening. This is wrong here. Last complete bar. Sorry, and this one's wrong. I think I might have just spotted my error there. That's probably why, because it was on the mouse pointer, not on the last bar. Okay, we'll go back to the Eurostoxx in a minute. So here we go. So we've got 0.4 as our IB range, and we say, okay, if the range is greater than 0.4, nearly 9% of the time that happens, then only 35% do we break both sides. So then we come across to the other chart, and 0.5. So what's 40 ticks at the current Bund price? It's about 0.2, so we'll change it to 0.2. 0.2 is not giving us any edge here, which is interesting. So from this study, I think that it does. I think it's hard. So I think you're better off sticking with a fixed range rather than normalizing it to a percentage, so to take into account the asset range. I think, it's hard to know why, and it's probably stupid to try and guess why. So I'm not going to. But if you see an edge in the fixed, or I found an edge in the fixed range, I'm not going to now go and start using this, although I will look into it further, because I think because they're so different, there might be something I've done wrong, but it doesn't look like there is, and nothing is really changed. So I'll just double check on the Eurostoxx again. And it was 1.2 or 1.5 I had. No, it's the same. So it's the same. So I'll do some further study on those, but for now it doesn't look like there's much edge to be gained in looking at it, adjusting it for the index value or the asset value. It looks like you're better off using a fixed tick value, because the index, the percentage doesn't really change, and you can't glean an edge from that. I hope that helped. As always, please leave a question or send me a question. My handle was on the Twitter handle was on the start. It's at HUH_Futex Live. It'd be great to hear from you, and if you want to see these definitions, please send me a direct message on Twitter, and I can send them so you can load them up into your market delta. All right, perfect. Thanks for your time.